Hi, I'm PNC Joe, and today let's delve into the violation of good faith and fair dealing, an issue that affects many in the world of commercial insurance. When two parties enter a contract, there's an expectation that they will act honestly and fair. However, breaches of this duty can lead to significant mistrust and legal troubles. For small business owners, navigating these situations is particularly challenging, as it can mean the difference between business continuity and financial loss. Understanding this complex issue is crucial for safeguarding your enterprise against potential pitfalls and ensuring a fair playing field. Keep watching, because in this video we will discuss these important topics. What is good faith and fair dealing in insurance? What constitutes a violation of good faith and fair dealing? Understanding the implied covenant of good faith and fair dealing. How can policyholders prove a bad faith claim against an insurer? What are the potential consequences for insurers found guilty of bad faith? How do courts determine whether an insurer acted in bad faith? The role of state laws and variations in bad faith insurance claims. The impact of bad faith on policyholder rights and remedies, and a bonus topic at the end. Let's go through these points one at a time. Good faith and fair dealing are promises that both the insurance company and the policyholder will be honest and fair with each other. When you buy insurance, you trust that the insurance company will help you if something bad happens. This trust is called good faith. The insurance company also expects you to tell the truth about what you are insuring. A violation occurs when the insurance company does not act honestly or fairly. For example, if an insurance company refuses to pay a claim without a good reason, or takes too long to pay, it may be violating this trust. Another example is if they try to pay less than what is fair. This is often called acting in bad faith. The implied covenant means that even if the words good faith are not written in the insurance policy, it is still expected. It is like an unwritten rule that both sides will be fair and honest. This means that the insurance company is generally expected to act fairly, even if it is not explicitly stated in the policy. If you think your insurance company is not being fair, you need to show evidence. This can include documents, emails, or letters that prove the company is not paying a claim on time or is being unreasonable. You might also need a lawyer to help you understand your rights and to make a strong case. If an insurance company is found guilty of bad faith, it may face various consequences. These might include paying extra money to the policyholder, covering the cost of legal fees, and potentially facing penalties for not adhering to legal standards. This is to encourage insurance companies to act fairly. Courts look at several things to decide if a company acted in bad faith. They check if the insurance company had a valid reason for denying a claim and if they followed the rules. They also see if the company communicated well with the policyholder. If they find the company was unfair or dishonest, it may be a bad faith case. Different states have different rules about what is considered bad faith. In some states, the laws are stricter, which means insurance companies have to be more careful. In other states, the laws might be more relaxed. It is important to know the laws where you live to understand your rights. When an insurance company acts in bad faith, it can hurt the policyholder. The policyholder might not get the money they need to fix problems or pay for damages. However, if the policyholder proves bad faith, they can ask the court to make the insurance company pay what they owe, plus extra for the trouble they caused. In bad faith cases, the court decides how much the insurance company should pay. This includes the original amount of the claim and any extra costs because of the delay or denial. The company might also have to pay penalties, which are like fines, for not following the rules. To protect yourself, always keep records of your communications with your insurer. Read your policy carefully to understand what is covered. If you notice something wrong, report it immediately. It is also helpful to get advice from a lawyer if you feel your rights are not being respected. By unraveling the complexities of good faith and fair dealing in commercial insurance, I hope you now feel more equipped to safeguard your business against any potential pitfalls. Understanding these principles not only fosters trust, but also promotes a fairer playing field for all parties involved. Remember, staying informed is your best defense against unfair practices. If you have any questions or ideas for future videos, please let me know in the comments below.